Hello guys, how are you all? That's great. Yeah, everybody seems fine. Yeah, that's great. So let's start our today's session. So we'll be starting a new chapter called branch accounting. Okay, so we will be starting a new chapter called branch accounting. Okay. So as usual, first of all, let me give an overview that what all things will be covered in the chapter. So first thing being independent branch. Second being dependent branch. Then third being foreign branch or head office. Fourth being, we can say, wholesale branch, which includes miscellaneous topics. Okay, so we will be covering these four things in the entire chapter. Okay, so let me start by giving you a brief introduction about what is the difference between branch and head office, and what is branch and what is head office. Okay, so we'll take a classic example of State Bank of India. So suppose this is India, this is the map of India. Excuse me for my drawing, but okay, we'll draw again. Okay, so we can say somewhat this. Okay, so this is the map of India, we can say. So somewhere here is Delhi. Okay, so State Bank started from Delhi only. Its head office is in Delhi, and you will be shocked to know that we have approx 22,400 branches of SBI approximately. I'll let you know what is the difference between branch and head office and what are the branches. So see, somewhat this is Delhi. Okay, so when the SBI opened its banking network from this area in Delhi, so it was able to serve only some of the people which covered only this much area, correct? But it wanted to grow. Okay, and it wanted that more people use the SBI network for banking system. So what it might have done, it might have opened one more banking unit somewhere here, so that it will serve more people covering this area. So accordingly, for serving of whole of India, it has opened like many branches. Like suppose this is all are these are branches of SBI. We'll just take an example. It has sub 22,400 branches. So these all things, like these all banking units or these centers which were opened to serve the customers or for in a wider range of network. Okay, so these all these things, all these units came to known as branches. Okay, so these all are called branches, and this the main area from which SBI has been regulated, not regulated we'll say, which has been operated we'll say. So this becomes the head office. So this becomes head office, and everything else becomes branches. Okay, so you got a brief idea of that what is branch and what is head office. Okay, so now we'll jump into our topic. What independent branch? By covering independent branch, we'll cover the concept today, and once our independent branch will be finished, then we can say that 40% of our chapter will be completed. Okay, so I I'll tell you that how you identify an independent branch or a dependent branch, like what category of branch it is. Okay, so suppose you are in Bangalore. You are in Bangalore. So by seeing any of the branch of SBI in Bangalore, when you visit your nearest SBI banking system or nearest SBI branch, just have a quick look. Just have a quick look everywhere, and by just looking at the branch, can you tell that it's a dependent branch or an independent branch? Tell me. No, by looking, nobody will be able to identify that if it's a dependent branch or independent branch. The reason being is a branch is an independent branch. A branch is an independent branch when it maintains its own books of accounts. Okay. So if a particular branch is maintaining its own books of accounts, then it is called an independent branch. And if it's not maintaining its own set of books, then it is called dependent branch. Understood? What is dependent branch and what is independent branch? Understood? Okay. So today we'll be learning about independent branch, and mainly we will be learning about the incorporation. What? Incorporation. So we have some steps for incorporation. I'll show you that. Then we will move further. See, if you will see, I have the steps written. Incorporation of final accounts. Okay. So we'll read step by step, and I'll make you understand every step. And if you have any query, so you can ask after once the class is finished. Okay. I'll give you time for the query discussion. Okay. So yeah, we'll just read it and then I'll let you know what is it's trying to say. See, first step, incorporation of final accounts. First step, what it's saying, that reconcile head office and branch balances in respective books. What it's saying, I'll just make you understand. See, suppose here, I'll give an example. See, here there are two individuals, Ram and Shyam. Okay. So first transaction being that Ram sold goods to Shyam. What is there? Sold goods to Shyam for rupees 10,000. So what will be the journal entry in the books of Ram and in the books of Shyam? Tell me. Tell me. These are two different individuals. Okay. So what will be the entry in the books of Ram? Yeah. What? Shyam account. Debit. Two sales. 10,000. And what will be the entry in the books of Shyam? It will be purchase account debit to Ram. Amount will be 10,000. What does this signify? What does this signify? This signifies that Shyam has a debit balance in the books of Ram. So in the books of Shyam, Ram will have opposite and equal balance. That is, if Shyam has a balance of 10,000, debit balance of 10,000, Ram should have a credit balance of 10,000 in the books of Shyam. Understood? This is very basic journal entry. What we teach, what we learn in foundation as well. Like from the very starting, we are learning journal entries. So I have just passed a simple entry. Okay. So this signifies that if Shyam balance is 10,000 debit, then Ram should also have a 10,000 credit balance. Okay. Then only we will know that entries have been passed in the books and all the transactions are completed. Suppose in this particular case, Ram has sent the goods. Then Ram would pass this entry. But Shyam didn't receive the goods yet. And if Shyam didn't receive the goods yet, then will the entry be passed in the books of Shyam? No. No entry will be there in the books of Shyam. So this signifies that the books of Shyam is not complete. There is some inconsistency either in the books of Ram or in the book of Shyam. Because Shyam has a debit balance of 10,000, but Ram doesn't have a credit balance of 10,000. So this signifies that there are some inconsistency in in one or the other books. But here we know that Shyam has not received the goods. That's the reason for inconsistency. So what we will do? We'll pass the entry in the books of Shyam. What? Purchase account debit. Sorry, goods in transit account debit. Because we haven't received the goods. To Ram. 10k, 10k. Now, see. Now, both the balances are matching. So, which shows that every particular transactions have been recorded. Understood? Okay. So, this is the reconciliation which we are talking about. I'll give you an example, one more example, then you will understand. So, while doing branch accounting, the most important rule is that branch and head office are not same. They are two different entities which maintains two different set of books. Okay, we should never forget this rule. We should always remember that the branch and head office are two different persons. Like in this case, Ram and Shyam are two different persons. In the same way, a branch is different from head office. Okay, so suppose now we change our example, like this was not Ram, this was head office, and this was not Shyam, this was branch. Then the same thing will happen. What? Head office sold goods to branch for 10,000 rupees. Okay, so we'll have the same entry here, but it will be branch account debit to goods sent, goods sold to branch. Same thing, we have just changed the name of the accounts. Same way as it is branch, it will be goods in transit debit to head office account. Okay, so now we got that head office has a 10,000 debit balance of branch. So branch should have a 10,000 credit balance of head office. This is the reconciliation we are talking about. If this is there, we can move forward to our next step. So this is the very first step. This we do to check that every transaction has been recorded or not. Correct? See our first step. It's saying reconcile head office and branch balances in respective books. This is what we have learned now how to do it. Understood? Got it? Okay. That's the very first step. And always remember our golden rule that branch and head office are two different persons. Okay. Moving forward, the next step is we have to prepare final accounts. See what we are learning. We are learning the incorporation of final accounts. That is how to incorporate the books of head office and branch. like I'll just go back to my example. This is SBI example. See, now what happens? See, every branch is independent branch. We assume that this 22,400 approximately are independent branches and maintains their own set of books of accounts. Okay, so if every branch maintains its own set of books of accounts, we'll have 22,400 balance sheet for a single entity, that is SBI. Is that okay? No, it's not okay. For the users of the financial statement, they want every detail of this 22,400 branches in a single financial statement, so that they can take their decisions wisely. Okay, because if you will have one balance sheet for every branch, it will be impossible for the users to understand that what the condition is of the SBI. Understood? So that's why we have to incorporate this all these branches balance sheet into one, that is of head office. We prepare a consolidated balance sheet in which every detail is there for head office and for branch. Okay, understood? So in this incorporation, what we do in incorporation, we'll prepare a single balance sheet which represents whole of SBI. Okay, so you got the purpose of incorporation of financial accounts. So the very first step is clear, that we have to reconcile the head office and branch balances to know if all the transactions has been recorded or not. Understood? Okay, so what's our next step? Our next step is prepare final accounts in the books of branch. Okay, so first we'll prepare final accounts of branch after giving the effects of reconciliation. This reconciliation we have done here now. So after giving the effect for this, we'll prepare final accounts of branch. And once the final account of branch is prepared, we'll move into head office books. Okay, we can face one challenge while preparing final accounts of branch, that is closing stock might be missing, for which we will have to prepare stock account. That we will learn how to do it while solving the problems. I'll just give you a brief understanding of what the steps are for incorporation. Okay, so we understood the reason that why we do the reconciliation, to see that every transaction has been recorded or not. Okay, then second, we prepare final accounts of branch, and once the preparation for final accounts of branch has been done, we prepare the trading and profit and loss account for head office. Then once that is done, we prepare a consolidated balance sheet of head office and branch. This is our main purpose for doing the incorporation, that is preparing consolidated balance sheet of head office and branch. Okay, and these are the worst things, like remove it, not of our use. I'll let you know when we will come to this part. We don't see these all things. Okay, so we should start with our example so that you will understand that what we are trying to do. Okay, so I'll erase all these things, it will be better. Chalo, we will start with this example. Okay, so what was our first step? See, we have been given the trial balance for head office and for branch. So what's the very first step? Very first step is to see that if the transactions are recorded in full. So how we will check that? We'll check the balance of branch in the books of head office. So head office, where is branch? See, here it is branch. So we have a debit balance of 40,000. Okay, so now as the branch stands debit 40,000, so head office should stand at credit balance of 40,000 in the books of branch. So in the books of branch, we'll see head office stands Oh, it stands credit for 25,000. So we got our first problem. That is, we have to do the reconciliation. Step 1. What we have to do? We have to do the reconciliation. So how we'll do the reconciliation? See, there's a difference for 15,000. We have to identify that difference. That will be provided to you in the adjustment section. So see, we have got the adjustment section here. Okay. See, first is closing stock of is given for head office and branch. It's not for our use now. We have to see the reconciliation part. See, second is head office sent cash worth rupees 10,000 not yet received by branch. We got our first difference. That is 10,000 rupees. Okay. So head office has sent cash. So head office has already made the entry. Who has not made the entry? Branch. So now we'll make the entry in the books of branch. What entry will make? We'll make cash in transit debit to head office. How much? 10,000. Correct? Correct or not? So next, see, branch sent rupees 5,000 cash not received by head office. So here branch has sent the cash but is not received by head office. So branch has already passed the entry. Now who will pass? Head office will pass. So in the books of head office, what will be our entry? Our entry will be cash in transit debit to branch 5,000. Now let's see. Now we will see that branch has debit balance of 40,000 in the books of head office. So head office has passed the entry. Head office has credited branch by 5,000. So now it has a debit balance of 35,000. Correct? Debit balance of 35,000. Correct or not? And branch has credited head office by 10,000. So now this will become 35,000. 10,000 will increase. So now you see 35,000, 35,000. Now it's matching. Congratulations. So we have done our first step. That is the reconciliation thing. Okay. Understood? Understood our very first step. That is reconciliation. Tell me. Okay. Very nice. So, see, our first step is done. What's our second step? Our second step is to prepare final accounts in the books of branch after giving the effect of reconciliation. Chalo, we'll start preparing final accounts in the books of branch. What we'll do? We'll write branch books. Okay. So we are dividing the page into two parts. Okay. These are two pages. So here we will prepare trading account. And also profit and loss account. Okay. Here we will prepare balance sheet of branch. Okay. So these are assets and liabilities. Assets, liabilities. Okay. Done. Chalo. Chalo, we'll start preparing. This final account we are doing from our childhood. We'll continue that. So what we do? Fixed assets 75,000 branch. So we'll write fixed assets 75,000. Next what was their debtors 50,000. No, it was 25,000. No, see, it was 25,000. 25,000. What was the third thing? Third thing was this is done, this is done. This third is opening stock 40,000. So it will go in trading account. Sorry. To opening stock. How much? 40,000. Okay. Next was sales, that is 2,55,000. By sales 2,55,000. Okay. Next thing is goods sent to branch. Okay, this is not of our use because it's not in branch books. Goods received by branch. So this is purchase. This is basically purchase. So what we'll do? To goods received from head office. How much? It was 1,25,000. Next, expenses 30,000. It will go to PL. To expenses 30,000. Okay. Next, branch or head office. So it will go to balance sheet. Correct. It will go to balance sheet. Head office that had a credit balance of 25,000. Okay. Head office 25,000. Okay. Expense head 15,000 here. This was 15,000. Okay. So we have done, like here everything is covered. Okay, so now closing stock, we have got our closing stock also. See, when we did the reconciliation, no, then these 2 point was finished. We can just erase that. Our question is left only with this particular adjustment, closing stock. Okay, so we have given the closing stock of branch, that is 2 lakh. So we will add this also. So by closing stock, that is 2 lakh, and it will go to balance sheet as well, no? Stock. Okay, so we have taken every effect for trial balance. Now we have passed one entry, correct? So we'll see that entry and give effect for that as well. This branch books, cash in transit debit 10,000. So it will also come cash in transit 10,000, and head office was credited by 10,000. So we will add here 10,000. Correct. So it will lead to 35,000. Done. Done everything. See, finished. That's all. It's done. It is 4,55,000. So here gross profit will be 2,90,000. Here we'll bring down the gross profit 2,90,000. So we'll get to net profit 2,75,000. Okay, so what we do to net profit? We add it in capital. So here net profit will be 2,75,000. Done, finished. This is what we have to do in preparing final accounts for branch. So by adding this, we'll get 3,10,000, and by adding this also, we'll get 3,10,000. See, it is tallied. Done. Our second step is also finished. This is our second step. See, so easy. And we have given effect for every adjustment also as well. So I'll erase this as well. Now we just have to prepare consolidated balance sheet. So we'll move to our third step. So let's move to our third step. So what is our third step? See, our third step is to prepare trading and profit loss in the books of head office. Okay. So what we will do? We will just prepare trading and PL, not the balance sheet. Okay. So our third step is to prepare trading and PL in the head office books. Okay. So again we'll start here. This is in the books of head office. Okay. So again we'll divide this into two parts. This is trading account. Here only we'll prepare profit and loss account. Okay. So we'll see the trial balance. Okay. So first item is fixed assets. This is a balance sheet item. We'll ignore it. We'll ignore it. Opening stock. So opening stock is 35,000. So we'll write here to opening stock 35,000. Second item is sales 4,30,000. Sales will write by sales 4,30,000. Then goods sent to branch. This is also a sale 1,25,000. So by goods sent to branch 1,25,000. Then expense 30,000. This is also PL item. So to expense 30,000. Then this is branch or head office, that is balance sheet item. Other asset is also balance sheet item. Then purchases. So purchases. So to purchases. What was the figure? That was 1 lakh, I guess. Correct. Then everything is done. Then capital is balance sheet item. We'll ignore it. We had a adjustment that is for closing stock. So by closing stock, it was 1,50,000. Okay. So done. Everything was done. So we'll total it. We'll get 4, 5, 6, 7,05,000. 7,05,000 to gross profit 5,70,000. So by gross profit 5,70,000, we'll get our net profit as 5,40,000. Done. Our step 3 is also done. Very easy step. Nothing complex. Okay. Then what's our fourth step? Fourth and the last step. That is to prepare consolidated balance sheet of head office and branch. So first what we'll do, first we will prepare the balance sheet of head office. Okay. Then we will incorporate everything which was there in branch balance sheet. Okay. So first we have to prepare the balance sheet of head office. Chalo. Balance sheet. This is head office books, no? So liabilities, assets. First we'll incorporate everything. So fixed assets 1 lakh, debtors 50,000. So fixed assets 1 lakh, debtors 50,000. Then what was there? Another was branch or head office 40,000. So it will be branch, sorry, it was debit balance, no? Let me see again. Yeah, 40,000. So it was branch 40,000. Then other assets 4 lakhs. Okay, so branch is done. Then other assets 4 lakhs. Other assets 4 lakhs and capital was 2 lakhs. Okay, done. Then what was there? Then we have made an adjustment entry. We have passed an adjustment entry in the books of head office that cash in transit debit 5,000 to branch 5,000. Okay. Excuse me. Chalo. So so cash in transit 5,000 and branch 5,000. So cash in transit 5,000 and branch will be deducted because it had a credit balance of 8,000. Okay. So now everything is done. We just have to add here net profit, which we got from the PL account, that is 5,40,000. So if we see this, then this is the balance sheet of head office, correct? So this will tally, okay? But we were preparing consolidated balance sheet, so we don't have to do anything. We just have to bring everything from branch balance sheet and add it here. That's it. So if this, see, we will bring this fixed assets, debtors, stock, cash in transit, and net profit and head office. So what we'll see, that if we are bringing it here, how we will bring it here? We have to pass journal entry. So we'll pass journal entry that we received fixed assets for 75,000. Okay, so what is the entry we'll pass? Fixed assets debit 75,000, debtors debit how much? 25,000. This is the entry which is being passed by head office. We are receiving all these things. Stock 2 lakh. Okay. Then cash in transit 10,000. We forgot to add here stocks of head office. That was 1,50,000. Okay. Chalo. We brought all these things, these four. Then we will bring net profit. So this will be 2 branch because we have taken everything from branch. So its total will be 2 lakh, 3 lakh 10,000, and we'll bring profit. So for that, branch debit to net profit, that will be 2,75,000. So 2,75,000. So what will be the effect in balance sheet? Fixed assets will increase by 75,000. Will increase by 75,000. Debtors will increase by 25,000. Then stock will increase by 2 lakh. Cash in transit by 10,000. Then branch will be credited, that is branch will be decreased by 3,10,000. Branch will increase by 2,75,000. Okay, then net profit will increase by 2,75,000. So 2,75,000. So everything which was there in the balance sheet of branch, we have incorporated it in the balance sheet of head office. Now this balance sheet will tally and this branch will become 0. Every time, see, it has become 0. So every time the branch figure will become 0. So I'll just remove it from the balance sheet. Now you can see that the balance sheet will tally with the total of 10,15,000. This will also 10,15,000. Understood? Got it? So this is how we prepare the consolidated balance sheet of head office and branch. If you have any query, you can ask me in the comment section. Okay, so that's it for today. We have seen that how the incorporation of final accounts is done. Okay, so thank you. Tada, bye bye.